In this video today, I'm going to explain how I do my market analysis and anticipation for where I'm anticipating for the market to go to, whether it's going to run for a buy side liquidity or sell side liquidity. So whether I'm going to be a buyer or seller in the market, I'm going to explain what I look out for, how I do my top-down analysis from looking at the dollar, looking at the euro, and also looking at the economic calendar as well. So right here, as you can see on my chart, right here we have the dollar on my chart, and we're currently, this is the weekly time frame, as you can see right there, weekly time frame. So overall, I've always talked about my bullish perspective on euro. So what that means is an inverse correlation for the dollar. So if I'm bullish on euro, it means I'm bearish on the dollar. So what am I looking for? I'm looking for opportunities to sell the dollar. And right now, the first thing I look at is where could potentially, so if I'm bearish, I want to see a run on buy side before a run on sell side. And where is the potential area that I'm anticipating to see a run on sell side? What could potentially draw price to the buy side liquidity before the sell side liquidity? And right here, as you can see, we're on the weekly time frame. And the reason we're on the weekly time frame is because I'm trying to anticipate a weekly move where the market will go overall, where the market gravitate to the sell side or to the downside. Now, if the market is going to go to the sell side, I'm anticipating for a run on buy side and then sell side. Does that make sense? Now, the first thing I now do is I'm looking for liquidity resting at the buy side. And right here, we can see we have this weekly inefficiency. And right there, you can see the weekly inefficiency. And right here, we also have weekly inefficiency resting at the downside. So we have two weekly inefficiencies, one resting at the buy side and the other resting at the sell side. Which one would the market gravitate to first? Now, because I'm bearish on the dollar, I want to see the dollar continue to the downside. What I'll be anticipating would be for a potential run to buy side first. If we're bearish, I want to see a run on buy side first before a run to sell side. So if for any reason price runs down to the sell side first, then that means I'm just going to have to be on the sidelines, because potentially we could just continue lower. Because overall, looking at the dollar, what I'm seeing right here, this right here is low resistance liquidity. So I wouldn't really be surprised to see price be so eager to run down and run over this low resistance liquidities resting right here. I wouldn't be surprised to see an impulsive move to run it. But for me to engage in any trade, the first thing I want to see is a run up here and then run down. And I'll be targeting first take profit, second take profit. Now, after doing this analysis on the euro, on the dollar, the next thing I do is to look at the euro. What is the euro doing? Which key levels am I going to be looking to get into trades? Now, on the euro perspective, well, on the weekly time frame, I draw my fib from my high to the low. I want to know the equilibrium. This right here is equilibrium. If I want to buy, I want to buy below equilibrium, which is discount. So from here, anything below here, I'm looking for my key levels on the euro. Now take a look at what happened right here. We have a high, we have a low, and then as you can see, price has been in this range, eventually took liquidity from this high. And after taking that liquidity, look at what we mitigated here. We mitigated this inefficiency on the weekly before running to take that liquidity. So after this mitigation, I want to see a 1 hour break of structure right here after this mitigation. So I'll just put a straight line right there so we don't miss the key level I'm talking about. So we go straight down. This right here, you can see this was the low that mitigated that position. You can see the daily inefficiency there as well. So once price mitigated this position, all I'm looking forward to see is what I'm looking for is 1 hour break of structure, 30 minutes break of structure after that mitigation. And right there, as you can see, after we mitigated that key level, price created significant high, low break of structure. After this break of structure, this key level becomes my point of interest where I'm anticipating to see the market come down into. And right there, as you can see, for me to engage in any trade for euro, I need to see price come down into this position. Now, if we don't come down here, it just certainly means I have to be on the sidelines. But if we come down here, that is when I'll now start looking for entries to buy. And then where will I be targeting? I'll be targeting low resistance liquidity here. I'll be targeting inefficiency here. This inefficiency here, I'll be targeting it right there. So you can see how I scaled from what the dollar is doing to what I'm anticipating to see on the euro. And now that I'm done with this analysis, I've figured out where I want to buy from. If price comes into my key levels, this is where I want to buy from. And if it comes there and I see a shift in market structure in the 5 minutes time frame from here, that's where I'll look for a buy. And I've also shown you where I will be taking profit, which is this inefficiency. That will be my profit area where I'll be scaling out profits. So if I'm buying here, I'm scaling out here. And why is that? Because I've done my analysis from the dollar and now I'm doing the analysis on the euro. And now I've come to a conclusion for my entry zones and my exit zones. And if price does not come to my entry zones, I'll just have to do nothing. And if it comes there, that is when I'll take a trade. Now, the next thing I do, I go to the Forex factory and I'm looking at what could potentially bring in some level of volatility into the marketplace. High impact news. Is there any high impact news from Tuesday to Friday? On Tuesday, I'm looking for high impact news on euro or the dollar. And right here, tomorrow, 1:30 today is, so today is Tuesday, it's really early for Tuesday for London time. And as you can see right here, we'll have a high impact news 1:30 p.m. And then on Wednesday, we do have high impact news 1:30 p.m. core CPI. This is really going to bring in some level of volatility into the market, and this is on Wednesday. So I'll be watching closely what price will do tomorrow and on Wednesday, because price with the CPI numbers could come out. It could spike price to go to the upside, or it could spike price to go to the downside. Nobody knows which direction the market is going to go after the CPI numbers come out. The only thing I'm doing is watching my key levels. If price comes to my key levels and I see a break of structure on the smaller time frame, that is when I'm looking for a trade. If I don't see anything to show me any sort of reaction, I'll just be on the sidelines. So as you can see as well, on Thursday, we still have high impact news, 3 high impact news on the dollar as well. So which means there's going to be a very high volatility on the dollar, whether it's going to go to the upside or to the downside. And then on Friday, we don't really have any high impact news. So as you can see, we don't really have any high impact news on the euro, but we do have high impact news, significant high impact news on the dollar. So I'm watching out on this, and this is pretty much the steps I take when I'm doing an analysis for the week, when I'm looking for areas of point of interest where I'm going to get in, areas I want to see reactions to potentially take trades. So if you found this insightful, feel free to give it a thumbs up, follow. You can also share this with your friends or family or people who are interested in trading as well. I appreciate you for tuning in, and I'll talk to you in the next video.